Stocks and especially junk debt has soared to new records again this week. The European and Australian stock markets also joined the global rally and are at records. Even the United Arab Emirates have cheered the pause of this Iran war and are again approaching their 52-week highs. We'll look at precious metals, which are breaking out even as the dollar weakens, and dollar looks particularly vulnerable. I'll show you what I mean about that on the chart. We'll also finish up with Bitcoin, which is poised to likely break higher at this point. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, August 7, 2026. Don't forget to like, share, and comment on this video. Even put a thumbs up in the video in the comment section, and this would make this video recommended to more subscribers. Thank you. If you're a subscriber, stay tuned. We'll be covering lots of various securities. Some of the ETFs, crude oil, for example, will be covered in the members only section, large cap stocks, and a few of the speculative securities. So we're currently looking at high yield bonds, also known as junk debt, which just hit an all-time high. So we can actually look at it on the weekly time frame, and it is pretty dramatic the way it is going. And it's just non-stop rally basically. You can see that we started breaking out in 2023 and just kept going non-stop. This is good news, as I keep pointing out, because this is high yield bonds are correlated highly with the S&P 500. So this down below here is the correlation coefficient. You can see it's pretty much positive most of the time. So when stocks and junk debt are doing the same thing, that is a good news. So in this case, we're seeing high yield bonds break to records before S&P 500. And this is, I think, is a bullish divergence, and I would continue holding stocks basically at this point. S&P 500 also has hit a new all-time high on Wednesday, right there, and it is again, trading next to records. Although I did tell to my subscribers that we might see a slight pullback or at the very least a consolidation. There's also a little gap that remains between 3rd and 4th of August, so that might get filled still. If you look on the 4-hour chart, that gap is pretty visible. So this is a 4-hour chart. Again, with my indicators, you can find out more about these indicators. So there's the latest signal where I'm hovering on 10th of July 30th. And then it just popped higher, and there's the little gap between 26th of July and 2nd of August. I'm sorry, 31st of July and 2nd of August right there. And we just kept going higher until we hit all-time highs on Wednesday. Notice again we pulled back. We pulled back exactly to the green support resistance line and touched it. So far we have not yet closed above the fresh highs. I think we will actually still make another pullback and possibly attempt another rally. A deeper pullback towards this gap also might be possible, and we can look at it from this point of view, because the green line on daily charts, this is a daily chart, each candlestick is a day's worth of activity, is pretty close to the green line, so to the recent gap, the one that I was referring to. So we might see a pullback, or we might not. We might just trade sideways and then make new records as well. Overall, stocks are bullish. Dow Jones also gapped, actually two gaps, you can see here, and made new records. Equal weight ETF, equal weight S&P 500, ticker symbol RSP, also made an all-time high, showing that the market rally is extremely broad. So pretty much everything under the sun is going up. Same goes for small caps. Small caps also made a new all-time high. So again, I'm showing very, very broad participation from pretty much everything. Mid caps also made an all-time high. I barely ever look at mid caps, but that's it. As far as some of the non-United States markets, here is Europe at a fresh record. So broad rally, not only in the United States, but globally. Australia also made a new all-time high. So again, we're seeing this all over the world. This is United Arab Emirates. You know, this is the beginning of the Iran war, 27th, 28th of February. Pretty strong collapse here. But notice that this ETF, UAE, never actually went below the yellow support resistance line, so it was never an outright bear market. It was only a cautionary phase. And then we kind of traded back and forth, back and forth. We're now back above the blue support resistance line. So the latest signal is bullish. So I think there is a good chance we will shrug everything off and just continue higher. Perhaps, you know, people are just really tired of this war, as well as obviously people that live in the region. Anyway, so United Arab Emirates, so far this seems good to me. Let's just cross our fingers that nothing crazy again happens. Let's switch gears. We're currently looking at the US dollar. Dollar currency index until very recently was very bullish, and I thought we were going to make new records. In fact, I was saying like end of July here that we're very close to making 52-week highs. But no, suddenly we saw this action by the Japanese Bank of Japan and by United States Treasury on 29th and 30th of July, and it pretty much just collapsed. So now we're seeing the same thing on the dollar currency index, and this is happening against all other currencies. Euro versus US dollar, same thing. So dollar is under pressure from all directions. Latest signal is still bullish, because we're still above the blue line, and actually this is a touch of the blue line where I'm hovering on the 3rd of August. And actually today, same thing, we saw a touch of the blue line again. So both of those signals are bullish, but just the way this looks, from my personal experience, I don't like the way it looks, especially this just sudden collapse. Those sudden collapses don't just happen in a vacuum. And this is a 2% move, or about 2 points move. So very likely will continue lower, not necessarily immediately, but this looks vulnerable. So dollar looks vulnerable right now, and it might get even more vulnerable in the near term, unless again something happens and maybe you know, there's not going to be any more action by the Bank of Japan. Who knows? But as of right this instant, technically speaking, dollar is still in an uptrend. When or if we close below this red support resistance line, then we'll be in a downtrend. And for sure, at that point, we will want to be thinking about buying gold. Some people are already buying gold and gold miners because they, you know, thought that they were oversold. That's a reasonable assumption. I was going by the dollar. Dollar was in an uptrend, and when dollar is in an uptrend, I really try not to buy gold or gold related. So that's just my personal preference. I could have been wrong, but if I am correct about the fate of the dollar, and I mean, there's just no way to tell unless something again happens here and we rally. This looks vulnerable, and we could drop from here. So looking at gold, notice this over the last 3-4 days, notice this nice big breakout. First it started on the 5th of August, and then it continued today. So 5th of August was a pretty strong move, and it followed through today. So if we just look at this chart in isolation, technically speaking, it's bearish, because the latest signals were all closer below the red support resistance line. So right this instant, again, we're seeing what's called an overbought condition. And if it rolls over and closes below the red line, that would be a signal to buy it, to sell it, to sell it short. This will all depend on the dollar. If dollar continues to weaken, then what I just told you, it will not roll over. Most likely it will be the opposite. It will actually continue to strengthen. Gold will continue to strengthen and actually once or when or if it gets to this level at the blue line, which is 4,700 or so, then that would be a re-entry into a bull market, and we'll be thinking about buying again. Gold miners were even stronger. I was actually saying that gold miners were somewhat oversold. I didn't know we were going to get such a powerful rally. Notice today we gained over 7% with a big gap. The reason why I was saying that this is going to be more of a slug is because of the way the indicators were projecting into the future. Notice that they were projecting to kind of rise slowly, but this was a big move. You know, we got one gap, two gap, three gaps. So between just the last few days, and today's was a very strong move. So if Monday or Tuesday or sometime next week we'll go above this blue support resistance line, then gold miners are going to be back in the bull market, and it's probably just a matter of time before gold does the same thing. So we're watching gold miners very carefully. If they suddenly roll over, then most likely the dollar has strengthened yet again. And let's finish up with Bitcoin. So as far back as July, early July of this year, I was saying that Bitcoin is oversold and likely to rally. So far we've been sort of trading sideways and attempting to break out above this yellow support resistance line. It hasn't really truly broken out yet. It's just kind of slowly slugs here. But hopefully we'll finally see a move relatively soon. Notice again the projection into the future also shows that we're kind of potentially see how the indicators are curving down. That means that price doesn't have to travel as far to re-enter a bull market. And bull market currently is around 83,000, but even in September it's going to be only around 79,000. So I think there is a very good chance Bitcoin will continue to move higher, basically in this in the next few weeks to few months. And that's it for this week's recap. Head over to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on sign up on one of the products. So again, if you need my indicators, these lines on the chart, they're available for this. They're available for this interface, TradingView.com. Once you sign up on my site for the trading indicators, send me your TradingView user ID, and you only need a free TradingView account. So once you can sign up for free TradingView accounts and sign up on my site for a paid indicator, and I will open the door for you so you can see these lines on your chart basically. If you need my newsletter, so alerts are sent out daily, and weekly members only videos are also sent out. For example, this week we'll be covering all of these various securities. And the best deal, of course, is to get both trading indicators and newsletters. And best deal of that is to get them on yearly time frame, yearly basis. So you can get either monthly at $59.95, or if you get a yearly subscription, it's a $49.95 per month equivalent. Of course, you also get free 7-day trial with all of my packages. That's it for this week's recap. Let me know if you have any questions. Thank you for watching. Don't forget to hit the like button, and have another great trading week. Bye-bye.